The year started with a strong rally in many high-growth stocks, and expectations that global growth was starting to pick up after decelerating since 2019 due to the trade war. But this pretty picture was wrecked by you-know-who. The coronavirus pandemic caused a staggering 35% crash in stock prices in a little more than a month. Despite the economic effects of the pandemic, the stock markets are looking to end 2020 on a positive note. Investors are already looking forward to 2021, leaving behind 2020, where their portfolios suffered hugely for the COVID-19 pandemic. As the global economy continues to reopen and recover, certain exchange-traded funds, or ETFs, are poised to break out next year. Many companies in the mutual fund space are now getting in with the ETF business. So in this video, we will discuss elaborately the ETF and some best options available for 2021 to invest. Here are the 10 best ETFs for 2020. Before we get on to that, go ahead and like and subscribe if you haven't already. It helps us out a lot with the YouTube algorithm and lets us know that we are helping to enrich lives out there. And without any further ado, let's get on to the video. What exactly is an ETF? An exchange-traded fund, or ETF, is an investment fund that trades on an exchange. To put it more simply, an ETF is a type of fund that holds multiple underlying assets, rather than only one, like a stock. ETFs are similar to mutual funds, except ETF shares can be bought and sold throughout the trading day, as the price of an ETF's shares will change throughout the trading day. Mutual funds trade only at market close. Exchange-traded funds are one of the most important and valuable financial products created for individual investors in recent years. They are a popular option for investors looking to grow their money with both short and long-term horizons. An ETF is something that risk-averse investors can buy that holds multiple stocks or bonds. For investors wanting plenty of diversification or who don't feel comfortable researching individual stocks, ETFs are a smart and effective way to put your money to work. Why are ETFs a good option? ETFs have lower fees than mutual funds. And this is a big part of their appeal. The average US equity mutual fund charges 1.42% in annual administrative expenses, where the fees on an average equity ETF are around 0.5% to 0.6%. This is known as the expense ratio. ETFs provide lower average costs since it could be expensive for an investor to buy all the stocks held in an ETF portfolio individually. Brokers typically charge a commission for each trade. But in the case of ETFs, investors only need to execute one transaction to buy and one transaction to sell, which leads to fewer broker commissions since there are only a few trades being done by investors. An ETF may be a good way to add diversification to your portfolio. Given the wide variety of sector, style, industry, and country categories available, ETFs are able to provide an investor with a diversified portfolio. For example, buying shares of a technology sector ETF could potentially be less risky than purchasing shares of one technology stock. An ETF may own shares of many different technology companies. ETFs also can offer tax efficiency advantages to investors. Due to structural differences, mutual funds typically incur more capital gains taxes than ETFs. This means investors have more control over when they incur taxes. Now, here are some best ETFs for 2021. Number 10. WisdomTree Global ex-US Quality Dividend Growth Fund. DNL tracks the WisdomTree World ex-US Growth Index, which is a fundamentally weighted index focused on large-cap equities in emerging and developing markets, including dividend-paying companies. The index uses a growth score to select the top 30% of the 1,000 biggest companies by market value. The fund's top 3 holdings include Novo Nordisk AS, British American Tobacco plc, and Fortescue Metals Group Limited. This ETF has annual operating expenses of 0.58%. The fund's expense ratio is significantly higher than many ETFs in its category. It has amassed assets over $262.84 million, making it one of the average-sized ETFs in the world ETFs. Year-to-date, DNL has gained about 13.14% in 2020 and has averaged an annual return of 9.40% over the past 5 years. Number 9. Invesco DWA Technology Momentum ETF. Designed to provide broad exposure to the technology broad segment of the equity market, the Invesco DWA Technology Momentum ETF continues to provide an alternate take on US technology firms following a 2014 index change. The fund carries a much lower average market cap compared to the broad market. The ETF invests in US growth tech stocks of various market capitalizations. Over half the fund, 52%, is allocated to software, while the semiconductors and semiconductor equipment sector represents 22%. Its top 3 holdings include Five9 Incorporated, Apple Incorporated, and NVIDIA. Annual operating expenses for this ETF are 0.60%, with $268.45 million of assets under management. It has a performance of 65.52% over 2020 and has averaged an annual return of 21.72% over the past 5 years. Number 8. iShares Global Internet Giants ETF. The investment objective of iShares Global Internet Giants ETF seeks to self-index and track stocks exhibiting quality and growth characteristics in the internet sector. The fund identifies stocks in the following industries: internet software and services, system software, application software, and internet and direct marketing retail, using iShares' own definition of those sectors. The ETF is focused on large-cap growth stocks across developed markets. Investors are using the iShares Global Internet Giants ETF to gain exposure to a distinct set of large-cap internet and e-commerce stocks, most of which are not included in typical technology indexes. The fund's top 3 holdings include sponsored ADRs of Alibaba Group Holding Limited, Amazon.com Incorporated, and Tencent Holdings Limited. It has an expense ratio of 0.48% and $487.0 million of assets under management. It has a performance of 80.74% over the past year. Number 7. iShares MSCI ACWI ETF. The investment objective of iShares MSCI All-Country World Index Fund ETF seeks to track the investment results of an index composed of large and mid-capitalization developed and emerging market equities. The ACWI is a global index that includes almost 3,000 large and mid-cap equities across 11 different sectors. While the fund is globally focused, it's still heavily concentrated on US equities, with about 58% of it being based in the US. The remaining 42% of its holdings are based in other countries. The fund's top 3 holdings include Apple, Microsoft, and Amazon. The fund is sponsored by BlackRock. It has amassed assets over $544.04 million with an annual expense of 0.32%. It has a performance of 13.08% over 2020 and averaged an annual return of 8.07% over the past 10 years. Make sure to stick around for the top 3 because you will be amazed. Number 6. Invesco DWA Healthcare Momentum ETF. This fund seeks to track the investment results of the Dynamic Healthcare Sector Intellidex Index, which is composed of U.S. healthcare stocks. PTH provides an alternate take on the U.S. healthcare firms. PTH has been around for a while but changed indexes in 2014 to adopt a momentum-weighted Dorsey-Wright Relative Strength Index. The ETF focuses on U.S. healthcare growth stocks across the market cap spectrum. Nearly 25% of the fund is allocated to the biotechnology sector, followed by a 23% weighting of the healthcare equipment and supply sector. The fund selects the top at least 30 stocks with the highest momentum scores in the healthcare space. The fund's top 3 holdings include Amedisys Incorporated, Danaher Corporation, and Thermo Fisher Scientific Incorporated. It has amassed assets over $589.25 million with annual operating expenses of 0.60%. It's up to a performance of approximately 54.65% in 2020 and averaged an annual return of 18.56% over the past 10 years. Number 5. Invesco S&P 500 Quality ETF. The S&P 500 Index, or the Standard & Poor's 500 Index, is a market capitalization weighted index of 500 of the largest publicly traded companies in the U.S. The PowerShares S&P 500 high-quality portfolio is designed to provide exposure to stocks in the S&P 500 with long-term growth and stability of earnings and dividends. The fund is rebalanced and reconstituted quarterly. There are currently 136 stocks in the portfolio. SPHQ is a large-cap ETF focused primarily on U.S. growth stocks and offers investors an alternative approach to other funds that track the S&P 500 index. The index gives each company a quality score, which is calculated based on return on equity, accruals ratio, and financial leverage ratio. The fund's top 3 holdings include Apple Incorporated, Nvidia Corporation, and Procter & Gamble Co. The stated expense ratio is 0.15%, with $2.2 billion worth of assets under management and experienced 14.01% growth over 2020 and has averaged an annual return of 13.35% over the past 10 years. Number 4. ARK Next Generation Internet ETF. For ARK Next Generation Internet ETF, well, let's just say there are Internet ETFs and then there's ARKW. The fund provides exposure to technology stocks that define the next generation Internet. That means stocks of companies engaged in artificial intelligence, big data, cloud computing, cybersecurity, and blockchain technology. The investment objective of ARKW seeks to benefit from shifting the basis of technology infrastructure from hardware to software to the cloud, enabling mobile and local services. About 39% of the fund is allocated to information technology stocks, while 33% is allocated to communication services and 18% to the consumer discretionary sector. The fund's top 3 holdings include Tesla Incorporated, Roku Incorporated, and Square Incorporated. The fund has $2.9 billion of assets under management with an expense ratio of 0.76%. It has a performance of 136.51% over the year of 2020 and averaged an annual return of 41.68% over the past 5 years. As we are entering into the top 3, make sure to like the video and subscribe to our channel. Number 3. Vanguard Dividend Appreciation. Vanguard Dividend Appreciation ETF is offered up from a highly respected fund family. VIG is a large-cap fund targeting growth equities through the Nasdaq US Dividend Achievers Select Index. The roughly 180 stock index tracks stocks that have increased their dividends for at least 10 consecutive years, making the fund a strong option for investors with a long-term horizon. The best dividend ETF with the biggest size is VIG, Vanguard's flagship equity income fund that commands nearly $50 billion in assets under management. The fund's top 3 holdings include Microsoft Corporation, Walmart Incorporated, and Procter & Gamble. It has an expense ratio of 0.06%, a performance of 12.94% over 2020, and averaged an annual return of 11.96% over the past 10 years. Number 2. SPDR SP 500 ETF. The SPDR S&P 500 ETF is the granddaddy of ETFs, having been founded all the way back in 1993. The S&P 500 is a market cap weighted index of 505 large-cap US stocks, representing approximately 80% of the market value of the US stock market. Often synonymous with the market in the US, the S&P 500 is the closest thing to a default US stock index. What is the most interesting thing about SPY is that its top holdings include, and prepare to be amazed, Microsoft, Amazon, Apple, Facebook, Disney, and the list goes on with some of the top names. It has nearly $323 billion in assets, ranking it amongst the most popular ETFs. The expense ratio is 0.09%. The fund has experienced a growth of 15.48% over 2020 and averaged an annual return of 12.91% over the past 10 years. Number 1. Vanguard S&P 500 ETF. The best overall ETF comes from the largest mutual fund company, Vanguard. Warren Buffett himself has recommended the Vanguard's S&P 500 index fund by name. As its name suggests, the Vanguard S&P 500 tracks the S&P 500 index. The Vanguard S&P 500 ETF contains an outstanding blend of stocks across a variety of industries, including the technology, financial, and healthcare sectors. Its top holdings include Apple, Microsoft, Amazon, Facebook, and Alphabet. The ETF carries a minuscule expense ratio of 0.03% while boasting net assets of more than $571 billion and a return of 15.47% in 2020 and averaged an annual return of 12.97% over the past 10 years. In a nutshell, the Vanguard S&P 500 ETF is an all-in-one bet on the long-term success of American business. With one of the lowest fee structures of many mutual fund or ETF in the market, most of the long-term gains on the index will help you build wealth. Like all other investments, ETFs are not free of risk. Of course, as with all investments, ETFs may involve risks and other potential drawbacks. You should carefully consider the risks of investing, have your investment goals, do your research, and go for it. Well guys, that's it for this video. Click the links above to check out some of our other videos. Also, don't forget to like and subscribe for more content just like this. We have many great videos coming up, so see you guys in the next one.